on the operators and the investors that back the operators, fundamentally it comes down to money and returns. And if you look at the tier one markets of Western Europe and APAC at the moment, it's very difficult for an operator to drive double-digit return, principally because of inflated land costs, inflated build construction costs, and simply because the supply and demand, there's much more supply in those markets. So a lot of the international operators are looking specifically at this region in the whole, because the data center operators can drive a significant premium on the headline rent, which ultimately provides the investors and the operators with a higher profile. We're releasing our quarterly research report for the MENA data center markets, which comes out on Thursday. So we've done a very deep dive analysis in terms of take-up, supply, rate of absorption, etc. And whilst there's a lot of noise, let's be frank, there's a lot of noise across the region generally. In the last 12 months alone, there's only been 25 megawatts of genuine take-up in Dubai, the biggest market. 12.5 megawatts in KSA. Across Bahrain, Kuwait, and Oman, 7.5 megawatts of colo capacity. And I think what you described there is really helpful, because in some ways it feels as though the market's about to take off. It certainly hasn't taken off yet. We don't want to get ahead of ourselves, but there seems to be, particularly from that design and construction perspective, an opportunity to kind of look at lessons from other established markets so that we can get it right in this region. Yeah. And so that when the hyperscale do arrive at scale, you've got something that is ready for tomorrow's market, if you like. I think, and to be frank, we're getting asked a lot by private equity, sovereign wealth. It feels like every man and his dog is desperate to get in this space at the moment, which is great, right? Obviously really, really positive, and there is buckets of cash here. The danger is the uneducated investor approaching their investment as they do with real estate. This is not real estate. But equally, it's not just infrastructure. It's a hybrid between the two. My advice when approached by the investors is think about how far up the stack you want to go in reality, and walk before you can run. So if you're an investor that has a very large land bank, have a look at that in the first instance. Does any of your existing land bank look as though it could be viable for data center development? Secure the power, design a hyperscale compliance scheme, then approach the operators potentially on a JV basis or offer them a powered shell. But be careful on the JV basis, because you want to make sure that your joint venture partner has every chance of winning the business of the cloud. Otherwise, you've got capital sat there not doing anything. So I totally agree. It's about educating yourself in the first instance, understand the different types of data centers as well. And it's creating USPs as well, right? Because that's one thing that I find, I'll be frank, frustrating. So many data center operators talk about the fact that they've got a different product. Oh, we're green because we get green power coming to the sites. We're a green data center operator, but then they don't use green certified concrete, or haven't got electric charging points in the car park, whatever it may be. There has to be a differentiating factor, and it goes back to the point before, is that this market's about to take off. So if you're an investor looking to invest into an existing platform or set up a new platform, what are your USPs? I'm going to say the word sustainability, obviously, again. No. But like fundamentally,
it's on the cover. It's
showing badge.
Sustainable data center.
If you're not leading with a green powered infrastructure approach and green throughout everything that you do, you're fundamentally going to be left behind. You've heard Equinix say it today. You heard Oracle say it today. Amazon have said it. Google have said it. They've all said it. Carbon neutrality by 25 or 30. So again, it goes back to the point of creating, designing, and planning for tomorrow's market, because we're talking about tomorrow's market here. We're not talking about today's market. Now, I think ultimately the piece that's going to be key, as we've established, is competition. As more operators get comfortable coming into the marketplace, as we get comfortable designing tomorrow's data centers, then ultimately we'll see a larger wave of both enterprise wholesale and ultimately hyperscale deployment. Ultimately, though, you do have to look at relativity. It's never going to be the size of London. A single market. It's never going to be the size of some of the other markets. But as mentioned before in the previous panel, we are way, way behind the curve. So the great news is that we're going to enjoy significant growth. The key question is exactly when is that true growth going to start taking effect? But pricing-wise is a good point, right? Because we've got a couple of customers that we're acting for at the moment. And this is one thing that I always get asked actually is, how much does price play its role when a data center customer is deciding where to deploy? Actually, it's very, very low on the list. To put it into perspective, obviously I can't name the name of the operator because I'll probably never work with them again, and our head of valuation is here as well. I'm sure he does some of their valuation work, but 5 years ago we were deploying on behalf of customers into Saudi Arabia, a small retail requirement, one of the biggest names US banks in the world. They were taking 30 kilowatts of power over 6 racks in a cage, and the price blended back to $1,200 a kilowatt, and that's just on the data center space itself. That didn't take into consideration the bandwidth cost as well on the long haul. Now, that same customer has just negotiated a similar amount of space, and we're down to $275 a kilowatt, which is a bit more realistic. That being said, the customer still paid the $1,200. So it's that balance between not going too far where you're taking the mickey, but also to reflect that there is enhanced risk here when developing data centers because of all the reasons the guys have just laid out. I think if you look at the leading data center platforms outside of the US REITs, Equinix and Digital Realty, a lot of the platforms are backed by private equity, infrastructure capital, who 10 years ago probably didn't have any interest in diversifying their investment portfolios and backing operational platforms. I can guarantee that all of the top 10 private equity firms in the world now have some exposure to data centers, and where they don't, they immediately want it now, and we're running a couple of processes on that basis. The danger, as I referenced earlier on, is that they approach the investment into data centers in the same way they do for real estate, without recognizing the nuances and the risk profile. It's funny the number of times that we are approached by a real estate investor who may own a parcel of land next to a substation, next to a subsea cable landing station, and they think they're sat on the gold mine, and they might well be. And we say, brilliant, we'll sell the land to the telco or another operator. And they say, no, we want to do a joint venture. You say, okay, fine. So you look at the joint venture, and as soon as they see what an SLA actually means, and the financial impairment in missing that SLA, no, we don't want to know. So I think it's good news for the sector generally that there's an increased, diversified source of capital looking to access the space, but they too are going on that education drive right now. Fundamentally, as of the end of last year, there was more money spent on data centers than any other asset class across the real estate industry. So that's an indication of itself of the appetite globally.